We are now just seconds away from initial jobless claims. We're going to get a revised look at third quarter GDP and October durable goods orders. We're going to get straight over to the man in Chicago in the Windy City. Rick Santelli is standing by at the CME in Chicago. Rick, the numbers.
And there's a long list of them, so everybody watching and listening, get comfortable. On initial claims, expecting 215,000. We come in at 213,000. That equals last month, but that moves up now to 215,000. That is the lightest level since April of this year. If we look at continuing claims, it remains on its second a revision. 1,907,000. I was going to say it's the second week above 1.9, but last week's 1.9 million was downgraded to slightly under. So this remains the loftiest level going back to November of 2021. Let's look at our second time around the block on GDP. It remains for the third quarter at 2.8%. And if we look at consumption, remember last time we looked, it was a whopping 3.7. That was the best going all the way back to Q1 of 23. It comes down just a bit to 3.5, but that still remains pretty lofty. It equals the fourth quarter of 23. If we look at the price index, moved up a tenth from 1.8 to 1.9, but that's still the best progress since it was 1.5 in the last quarter of 23. Finally, let's look at core price action. 2.1%, it sheds 0.1%. At 2.1, it's the lightest, since it was 2% last quarter of last year. Now let's switch gears to durable goods, shall we? Durable goods headline number was expected to be up 0.1. It comes in exactly at 0.1. And last month becomes 0.4 instead of 0.5%. If you look at the ex-transportation figure, that is also up. Folks. The headline was up 0.2. Ex-transportation is up 0.1. If we look at capital good orders, non-defense ex-aircraft, a proxy for capital spending, it moves up to 0.2, better than expected. That's pretty lofty. But do consider that in the rear view mirror, if you look at capital good orders, we had up 0.7. That was a strong number. It now gets cut basically in half to up 0.3. Up 0.3 ends up the best since June of last year. And finally, let's look at shipments instead of orders. Shipments are up 0.2%, and that is as expected. Now, let's look at trade balance, and this really is important, folks. I know it's an advanced look, but it's at minus 99.1. But last look at 108.7, that is the second highest trade deficit in history, and that goes back to 1989. And we all know the trade balance may have a lot of movement in the future based on things like tariffs. And also, this number has a lot of activity surrounding some of the pull forward of many entities trying to get ahead of potential tariff action. Wholesale inventories, they were up 0.2. Retail inventories were up 0.1. The market siphoned all of that. We now end up at 420 in a 2-year. And guess where it was before all those numbers? Yeah, you guessed right, at 420. If we look at 10-year, 425 before the number remains at 425. If it was to close there, it would be a 1-month low yield close. Back to you, Andrew, and the gang.